G'day, I'm here with Dave Windler today. How you doing, Dave?
Good, thanks, Steve. How are you, man? All right?
Yeah, very, very good. Hey, thanks for doing this. I know it's your day off. Sorry, this is a COVID joke. Not good. Hey, so today I thought what we do is I haven't spoken to Dave for ages, and I kind of wanted to catch up, and I wanted to, basically come to both of our databases with some information about funding and lending and what's going on in the property market and that type of stuff. And so Dave and I have got a bit of a list of information we want to spread. Obviously, I'm a property coach, have been for many years all around New Zealand, and Dave Windler is founding director of Mortgage Supply Company.
Yep.
So you're based, we're just talking about it off air, you're based in Te Atatū, but I noticed from your website now, you're actually nationwide. You're actually, all through the North Island, got an advisor in the South Island too?
Yeah, we've got a bit of spread. Now, Steve is a team of sort of 25 advisors in the business, and, kind of grown organically a little bit over time, and got some good people in the business, helping their clients through some pretty tough times.
Yeah, there's some interesting things going on out there, obviously.
For sure.
We'd like to cover a lot of that as well. And for people watching this live stream today, it's a very interactive live stream, so feel free to ask both Dave and I questions. We've got a few subjects that we think is pretty interesting that we want to bring to the marketplace, but we'd love to answer your questions as well. And it's 11 o'clock Friday morning. We're live on Facebook on a few different channels, but this may come to you as a recording at a later date as well, because Facebook does that. They push it out pretty hard. So love to hear your questions later on, and Dave and I will answer them on our Facebook pages and go back historically and look at it again and answer questions as they come up as well. But firstly, let's get some interaction going. If you want to put in a comment on the Facebook page that you're watching this from and just tell us where you're watching it from, it'll pop up on here and we can see that as well. Or just hit a like, or the big open mouth one with the big eyes. Love that one. That's one of my favorites.
I want some love hearts, man.
Love hearts, you reckon?
Yeah, absolutely.
Cool. So there's what's it, about 50 people online watching at the moment. That's awesome. So what we wanted to cover today was we've got a few interesting subjects. I might just throw it over to you, Dave. Where do you see the lending market for property investors and homeowners at the moment? What's going on?
Oh, look, I think in the here and the now, it's pretty tight. I think if we look at this from a bank's perspective, that they've just come out of 3-4 weeks worth of supporting their existing client base with hundreds of thousands of hardship requests. So, when this hit, they all set up distinct and processes that their customers could go through to either look at a mortgage deferral or a restructure of their situation to go interest only. And they've diverted a lot of resources into doing that, which was the right thing to do. So for us in the third party space, a lot of the people we deal with normally were taken away from that front line into COVID teams to address as quickly as they could the needs of their client base. And in recent days in particular, what we're seeing from banks is that they're gearing up to be reluctant to make lending decisions. And that's on the basis that I think they don't know what is going to happen for the remainder of 2020. I don't think any of us do yet. No. What's going to happen to the property market? They're delaying making credit decisions based on something that they don't know, and they're particularly wary of bringing across to them new to bank business. They've got some very firm criteria in place for people who may be looking to refinance or change provider right now. So it's actually it's a lot tighter than potentially mainstream media might be suggesting. Although there's some good news floating around, and I know we're going to talk about that too.
Well, it's just a crazy market. I mean, realistically, you've got people that have had solid jobs with great employers for many, many years who are sitting on the couch watching Netflix, and who are, for all intents and purposes, for the bank's purposes, unemployed currently and not sure when or if they're going to go back to their employment. And then you've got supermarket workers who are suddenly the golden boys, and they have, it's just some craziness going on. But for your business, as a mortgage broker, I see you as the intermediary in the middle point. And at the moment, the banks aren't doing their part, meaning they're really not processing applications this week. They've closed shop, their heads down, and really you probably don't want to you're going to shoot me. This is your business. You probably don't want to put an application to the bank right now, but that's only the last of three parts, and you're the middle part. So you're processing the application for the benefit of the borrower, and the first part is the borrower getting their ducks in a row. So I suppose now is a really great time for part one and part two.
Yeah, well, look, we're having a lot of conversations with people. All right, so first 2-3 weeks of this, we were flat out supporting our own client base, helping them make good quality decisions under pressure. And when we were very, very busy doing that. There was probably then about 2 or 3 days when that kind of tailed off, and actually probably had 2 or 3 days that were pretty quiet. And then all of a sudden it's gone the other way, and we're having lots of conversations with people who are gearing up their thinking, starting to prep up to look ahead, look to a future that will potentially allow them to reinvest in the marketplace. And that it is a good time to do that, and it is a good time to start to prep up, because before we sort of get to that point of submitting a loan application for somebody, there's a fair bit of prep work that needs to be done. And our job is to present our client's situation professionally and accurately. And we've got certain expectations of our lenders that as well as our own standards that we look to meet. So I think for people tuning in now is that get to understand what your position is. Yes, there might be some layers of scrutiny that 5 weeks ago wouldn't have been there. So, applications and we are getting approvals. Don't get me wrong. It's just not that easy. And we're actually got quite a lot of new activity happening, but we're gonna ask questions of, has your income been affected? What's happening going forwards? When are you going back to work? For businesses in particular, I think that the conversation is a longer one, because historically when we're dealing with banks, they want 2 years financial performance for someone who's self-employed, and on the basis that the best measure of future ability is past performance. So if you've got a good, healthy business that's had 2 years of solid profit in a row, the expectation would be that next year will be pretty similar.
Yeah,
we can't have that expectation anymore, Steve. So what's going to happen in that space will be really interesting. And I think that we can expect banks to go, that's all well and good, great. Show us the management accounts, show us 3 months of your business banking account, show us your last couple of GST returns, and tell us what the future looks like. Yeah. And I think that those sort of applications will have more layers to them than historically, and quite understandably too.
I think it's worth obviously noting that when people look at 2020's financial accounts for the next 3 or 4 years, there's forever going to be an asterisk next to them saying, 2 months, 3 months COVID close down. But that's going to not be just for your clients and not just for New Zealand. It's going to be worldwide. And so, this is not something that's like a Kaikoura earthquake or something that's hit a small demographic. This is everybody. And I think that in reality, New Zealand exports an awful lot of product. We're actually in a really good position globally. And, for my little bubble here, I'm sitting here in my house in Lower Hutt, and Lower Hutt hasn't had a new case of COVID for 18 days. I think we're going to come out of this next week, and stage 3 will be stage 2 in a couple of weeks' time. And I could see the government and banks and everybody ramping it up to try and get this economy going again in a great rush. And I think it'll absolutely happen. Now, I just want to go back and touch on something you mentioned there about mortgage holidays. I wrote a blog piece on my website that went fairly viral. 70,000 people read it in the last 3 weeks. And it was entitled, would you take a holiday that cost you, a free holiday that cost you $36,000? So I calculated that a $500,000 mortgage holiday, once you include the interest over the period of a 30-year mortgage, could cost up to an additional $36,000. A lot of people took me negatively on that and thought I was saying don't take a mortgage holiday. A lot of people got financial stress at the moment.
Take it if you need to, but go through a process that leads you there. And what I mean by that is that, and I think it was really the gist in your article as well, is that there are other options, and there are also other behaviours. So I think that one of the things I've noticed, personally, I share this with you, is that over the last few weeks of being in lockdown, my personal spending has dropped hugely. Apart from food, and and probably wine, to be fair, which is one of my indulgences. But I think that I look at my historic spend for what I earn and go, oh, Dave, you're blowing some dough there.
Yeah.
And I think that one of the upsides of this, hopefully for people, has been a simpler life, and a simpler existence, and an enjoyment of the simple things. And I know once I get out of this and we get to, say, stage 2, there are things that I enjoy doing that I'm going to appreciate so much more, and not take them for granted. And so, as you look at your positioning and make some decisions with respect to your mortgage, I'd encourage people to look at things first that are entirely within their control. Can I rearrange my budget so that the at worst decision you make is you go interest only.
Yeah.
It's the difference, if you like, between treading water for a while and going under, and how long do you go under for before you come back up and breathe some air. But again, having said that, if you're in a position where you have lost your job, you have got no choice. You take that mortgage holiday and survive.
Yeah.
But
I think that you've just hit the nail on the head. New Zealanders have just realised how much stuff they can do without. And we were talking off camera earlier that leading up to this for the last couple of years, as an investor, the hardest thing to come by was equity. And everybody had these loan-to-value ratio restrictions at sort of 70-80% best case. And it's looking a lot like the Reserve Bank's going to relax those loan-to-value ratio restrictions. And so instantly the New Zealand investors' property market has gone from an equity market where equity's the hard thing to get to a cash flow market where nobody's actually working at the moment. Nobody's got great income. There's a lack of consumer confidence around, I suppose, and cash flow is going to be king. Would you agree with
hugely. That? Yeah, very much so. And I think it's been the case for the last couple of years. I think when you strip lending back to the very basics, there's only two things that are actually really important. Do I have enough equity and do I have enough income? That's it. All right. And if we go back, say, a couple of years ago, with the calculations that banks used then to assess your ability to borrow through income, they were pretty lenient. All right. And they've turned the screws quite a bit since then on the basis that they are operating in a more regulated environment. There's this thing called the Responsible Lending Code. There was the aftermath of what happened in Australia and the Royal Commission. So there's a real conservative assessment of people's ability to borrow. And there's all sorts of measures that banks put in play to kind of put in play quite a big gap between the cash flow, the real cash flow position, and how they view it. And the biggest one of those, as many people will know, is that you might be able to get yourself a 3.09% 1-year fixed rate right now. Okay. But that's not the repayment figure banks will put into their calculators to see if you can afford that mortgage. That stress test can be 695, 7.2. So almost, well, definitely twice that of the real cash flow. And that's applied across all of your debt. So if you're an investor, the gap between your true cash flow position and how the bank assesses it can be enormous. And that's what will put a lid on things. And this change and relaxing of the LVR rules will sort of bring usable equity back to investors, but they just still might not be able to access it because the income calculations won't allow them to.
Yeah. So we've got a list of things there. So the Reserve Bank has relaxed the Responsible Lending Code to allow banks to lend more money because they need the cash to flow through the marketplace. Loan-to-value ratio restrictions were brought in place to cool the housing market, let's be fair.
Yep.
And 6 months before this pandemic hit New Zealand, the Reserve Bank could have got rid of those LVR restrictions because predominantly the Auckland housing market, which is 60% of the New Zealand housing market, had already cooled. And so I felt that was coming. I just felt that they used the timing of now to get rid of it and say that it's going to be gone for the next 12 months to encourage the New Zealand property market to get going. You guys feel free to comment on this and tell me if you think I'm talking out of, if I'm wrong about this or not, but that's how I feel it's going. I'm looking at it and going, we're at 3% interest rates at the moment. That could drop again. I really do think it could go to zero. And I also think that the bank will take a very close look, and this will be a political decision, but the bank will actually take a very close look at whether foreign buyers are allowed back into New Zealand again.
Yeah, and I noticed someone's sort of thrown that same question up on the chat there, Stephen. Yeah, I'm not sure about that one, bud. I mean, I think that, that whilst we want to have a situation where our property market is stimulated, propped up, encouraged, whatever words you want to use, that politically it will be the case that they'll want it that way for New Zealanders, and particularly, we've got election this year. If Labor get voted back in again, they won't want house prices pushed up, and that housing affordability debate come back into things in the lead up to an election. I personally, I don't see it happening, but yeah, a lot of it will depend on the next 3 months. I think the next 3 months, once we get out of stage 3 and hit stage 2, the 3 months thereafter and what happens will influence a lot of the decisions that are going to be made for us.
Yeah, and I mean, I don't want to get political, but I think what Jacinda's done with the country has been pretty good. We needed some guidance. We needed to be told what to do. I'm actually incredibly impressed by the general New Zealand public who've gone home, stayed there and washed their hands. I'm looking at it going, I can feel a rise in the national psyche of let's come out of stage 2, stage 1 and get this economy going again. I think people will shop local. I think people will go down to their local cafe and support them financially. I think people will go back to work with rigor and want to get overtime if they possibly can. And I can see the light at the end of the tunnel in regards to that. I can see the New Zealand national psyche going that way. But I can also see some bad things coming. And if I, once again, just sort of circle back to, mortgage holidays, for instance, let's just throw a scenario out there and you tell me, Dave, whether you think I'm right or wrong with this. We've got 6 or 7 main banks in New Zealand, and we'll call it 8 main banks if you group together all the smaller banks. Mm-hmm. Each of those 8 main banks has had 8,000 or 9,000 applications for mortgage holidays. Those are going to run 6 months. They'll probably double in numbers before the end of 6 months' time in the applications made. The banks are realistically quite protected by the government because they're securing them for them. So there's going to be a lot of these mortgage holidays brought out. And that's going to be about 100,000 people who aren't paying their mortgage for the next 6 months. Those people during that 6 months are going to find out whether they've got a job still or not. If they don't, I can see things going pretty bad around Christmas and for early next year. I can see a lot of houses coming on the market under duress. And people who know me, I hope, will know that I would be the absolute last person to be sort of opportunistic about this. But I've been to enough mortgagee sales to know that the number one thing that somebody needs when they're at a mortgagee sale is a lot of people competing to buy their property. Because if they're looking at a $50,000 loss, but 10 people turn up to the mortgage, it might only be a $10,000 loss to them, which helps them get back on the ladder as soon as possible. Now, I'm also looking at it and talking to other investors around the place, and they're saying to me, look, the next 6 to 12 months for property investors who get their ducks in a row and get ready for this could be magic for them. They could get some great deals. They could get themselves in a very, very strong financial position. And I think that's actually what the country needs at the moment. It needs people to go out there and spend money and do things. How do you feel about that? Right or wrong?
I think you're right. I think, also the underlining opinion there around it's still got to be, decent people making a decent offer. Hopefully this doesn't turn into a game of haves and have-nots. I think over the next 6 months that if you kind of consider that's the tenure of many people who've gone on to a mortgage holiday, that in behind the stimuluses that are taking place will be a whole wave of ability to support, retrain, redistribute resources to industries and businesses that need them, and I'm hoping that the younger workforce who potentially aren't in jobs that they viewed as being their career jobs, are willing and open to kind of relocate, redistribute, retrain, go into different industries, because we know some industries now are really labor short because their demand's gone up, and that those folk come out of their 6-month mortgage holiday with an ability to restructure the lending again. Don't forget, one of your choices when you come out of a mortgage holiday is that you can potentially restructure again to not so you don't have this big jump into a much higher payment environment. And I think banks are going to be very willing to collaborate and rework with people as they grow again, and as they come out of a difficult position. Because I think politically for banks, they will on an ongoing basis will want to be seen to be doing the right thing. They really will. And I think for investors that are ready to go again, look, it's going to be a good opportunity time over the course of the next 12 months, because we're going to have some scenarios where vendors are stressed, will need to take what is in front of them, and that's the market. That's what will happen in any market. And for everyone in that person in that sort of situation, which is never going to be a good thing. As long as we do have willing buyers, they will get out of that situation.
Yep. No, I fully agree. And I've just seen some comments on the stream here. People saying, where do we think the market's going to go? And I can tell you exactly where I think the market's going to go. And so could David, and so could people that are smarter than us. And we would all be universally wrong. I think that what's going on at the moment is something that's unprecedented worldwide. And I know that's been used over and over and over again. But I don't think there will be a crash. I don't think that there will be a boom. I think that there was a housing shortage before this. I think there'll be a housing shortage after this. I think the tourist sector is going to take a smash, but offshore Kiwis are going to come back in droves. As soon as airlines are flying again, we'll have a lift that's going to be round about the size of our net immigration for the year anyway. And I think everything's going to start going again. But if there's 130 people online watching this right now as I say this, chuck it in the comments there and tell us what you think is going to happen, either up or down. I'd love to see what the general public think, because more and more when you do these things, you realize that what everybody thinks collectively is usually what happens statistically. And I mean, I've got 4 or 5 people on the stream here who are local real estate agents. Ricky Taylor out in Wanganui and Sarah Kilner at Ray White's and Petone here locally, and they're all saying that they're getting feedback and they're getting people contacting them, and people know that stage 3 means they can do one-on-one visits to properties and look at open homes again. And I think people know that there's going to be some bargains and some deals out there, and they're sort of itching to go for it. And that's why I chucked on the screen there, and I'll do it again, Dave's contact details. The first part of this, realistically, is proving your income, getting a whole pile of paperwork together, and sending it through to Dave and his team, and starting the conversation there. And I think that the perfect time to buy is always yesterday, quickly followed by today. But I think realistically, once the banks are up to lending again and reserve, and everybody's got used to this new normal, I think 2-3 months' time is going to be kind of a sweet spot. And so I've chucked Dave's website. Get in touch with them and get in touch with your broker or Dave's team, and do something. Consider it your civic duty to make some money out of this, and get the economy moving along again. I think it's imperative. I really, really do. And the market we've got, killer interest rates, people needing and wanting to sell, loan to value ratio restrictions taken off for at least 12 months. It's a cash flow market. You could set yourself up for the next 20 years.
Look, I think that we've got to remember that we went into this in what I thought was a pretty hot market. Yeah. If I think of my conversations, sort of late Jan, Feb, March, with customers all around the country, it was the first time I thought that all areas of the market had some heat in it. So it didn't matter where the investor was. The common conversation was prices are going up. I can't get my hands on what I want. First time buyers are out in force. Yep. And so we went into this with a market I thought was I say pretty heated in all areas. I think what may happen over the course of the remainder of the year is that evenness in the entire New Zealand market will change. All right. That you'll see major centres become a little bit more attractive If prices pull down a little bit in Auckland, then yields will improve, and there's always a bit of flight to quality. I think when things like this happen, that investors will look to where are the jobs? Well, they're in Auckland. Main centre purchasing will come back again. I think some regions will grow and some won't. So those that are really reliant on tourism, Queenstown could take a bit of a hit. I think those that are surrounded by agriculture and horticulture and industries associated with food production are going to need people moving there because they've got jobs to burn right now. So there could be a little bit of a shift around. And then some of those areas, where there's a lot of development gone on, sections being released. It'll be interesting to see what happens in the new build development space over the remainder of the year, because I think that will be an area that banks will tighten up on their funding.
Yeah, no, I agree. And realistically, let's look at it. You're in Auckland and you see this Auckland market moving along, and my good friend Shane Carruthers from Nexus Property, we talk just about every day about the Auckland property market, and he's Herne Bay watching $5 and $6 million section sales happen still. There was a retirement village up there that sold for nearly $100 million during the lockdown. I'm in Lower Hutt here, and I'm enjoying watching my local Petone become the Ponsonby of the Wellington property market, and Wellington's still really busy. Central government, everybody goes on about stability. Christchurch got a lot of new builds. South Island's still busy. I mean, the market was still really pumping along. This COVID thing wasn't a direct impact on the market the way that earthquakes and stuff have been. Like, earthquakes have devalued the property market, and we've recovered from that. This has just stopped it dead. And that pent-up demand is still sitting there, and it's still happening. And so I'm looking at this going, when banks start lending again, realizing they can lend as much money as they like, LVRs that they like, interest rate that they like, realistically is incredibly low. There's heaps of cash flow out there. I think it's going to be a little bit of a lolly scramble. I don't think that because the Reserve Bank has said that banks can lend a higher LVR, they necessarily will. And banks
agreed
do, which is they'll pick and choose the clients they want to work with, which is people that can prove their income and are well set up. But I can see this market coming back in a rush. I can.
Yeah. Look, and I think we're already getting some word, if you like, from one or two banks that they may look to run LVR decisions based on where the property is. So that you can, and I think that, again, coming back to kind of the removal of the LVR rules by the Reserve Bank, what will the banks do? They won't all do the same thing this time around. I think that what will happen here is that at the moment we've got disparity between banks based on how they calculate your ability to borrow through income. All right, there's can be some quite big gaps between the lending amounts each different bank will give any particular client. Right, the maths is all different. It's not the same. I think we could have a similar outcome with respect to LVR. So the lid's lift by the Reserve Bank. Some banks won't move. Some banks will go all the way. Some banks will have some middle ground. Some may even, as I suggest, have different LVR criteria for different locations, and there'll start to be another layer of choice between deciding where to place your business with respect to LVR, as well as the current one with income. So I think our lending environment this year will become more complicated, and therefore potentially one where people will need more help because there's more choice. And I think when the environment gets harder, the credit environment gets harder, I think a good mortgage broker becomes more valuable. Would certainly encourage the people tuning in to get one in their team, because you only know what you know. And if you haven't got one already, go get one. There's plenty of good ones around. Yeah,
and I also think that the lending market changes, and a good broker is talking to pretty much all the banks all of the time. But they even know banks that exist that most people have never heard of, and they're very good at creating an environment where joint ventures are a thing, or grab someone else's equity and somebody else's cash flow and put that together, and they're there to solve problems and make things happen. And that's what we're going to need. We are. Some people are going to be straight back to work, flat out, head down, bum up, making this cash flow, and want to be in the property market, but just don't have the time. And they're going to need to be put together with people that are in the market all day or every day, but can't prove their cash flow. So here's a random question then. Where do you think is a good place regionally in New Zealand to buy at the moment? Where are banks going to prefer? I know I've got some thoughts myself. What do you think?
I think if you consider that banks tend to be reasonably risk averse and conservative institutions, I think a safe bet's main centre: Auckland, Wellington, Christchurch, Hamilton. You won't go far wrong there. Personally, just looking at this from a lending perspective, we know the regions have done extremely well in the last few years. I think I read something the other day. It's 30% over the last 4 years, whereas Auckland's about 6-7%. I think that it will be pocketed in the regions now. I think regions that have got strong local industry will continue to do well, but where they're tourist reliant, they won't.
Yeah, no, I fully agree. I think, Wanaka, Queenstown, Rotorua is going to be in for some fairly tough times, which doesn't necessarily mean don't buy there. It means look for a bigger discount there, and there might be the deal of the century there. But I think the safe bet at the moment is Auckland, Wellington, Christchurch, Tauranga, Nelson, and retirement areas after that. Main centres, retirement areas, and then, if you have to go to Taranaki, Rotorua, other main places like Dunedin that aren't, core, I suppose, you go there for cash flow purely. I think the South Island do a resurgence, but I think, as a born and bred Wellingtonian that hates to say anything nice about the 09, I think Auckland at the moment is actually cheap. Dollar for dollar, it's a cheap buy at the moment. And I myself am looking at buying north of the Bombay Hills and putting something there in my portfolio because it constantly outperforms the market. Its downturns are less because it has a massive population base, and its upturns are more because it has a massive population base. Anybody got any comments on that and wants to disagree with me, chuck it in the comments. I love my Hutt Valley, I love Petone, but I'm comfortable here and I live here and I've been here forever. It is the most amazing place in New Zealand, don't get me wrong. But if I'm going to be spending $500,000 in my local area, I'd rather spend $800,000-900,000 and get a doer-upper in the 09 in Auckland at the moment, because I think that will outperform the rest of the market over the next couple of years. Love to hear your comments.
Yeah, potentially. Yeah, I think you're right. And I think, the biggest one that the biggest concern in the marketplace in terms of, property types will be commercial.
Yeah.
And I think that, obviously for two reasons. One, a number of businesses have been shut down. Will they reopen or not? But there's going to be a huge shift in the way that people work. Will they need an office going forwards? All of a sudden, have they found out that their workforce can work just as efficiently from home, and they actually don't need a shop front anymore? They've taken their business online, so why have a shop front? Why have a retail presence? And I think that that's where there's going to be the biggest adjustment in market. Will be in the commercial sector. Because that's where the most damage has taken place already, and that will be one to watch. And then again, security types, gosh, you can never go wrong with the bog standard.
Yeah, no, absolutely.
Normally when things get hard, it's the apartment market takes a bit of a hit. But standard 3-4 bedroom half site, properties do well. They stand up.
Yeah. So final thoughts, I suppose, from me, if we're going to wrap this up, I would say that I think it's going to be a little bit of a lolly scramble over the next 6 to 12 months. I think people need to look at their cash flow. I think they need to get finance approved once the banks are online and know where this is going a little better. If you've got an interest rate, I'd leave it floating at the moment. Personally, that's just me. And I think, reach out to people like yourself, and I'll put your email address back up there again.
Yeah, cheers, Dave. Appreciate that.
And if you need to contact me or talk to me about anything, I'm always available on my website as well, or on my Facebook fan page, which has been going bonkers lately. It's been crazy. I see, Dave, you've got a very active fan page on Facebook as well with like 5,000 people. Mine's just tipped over 11,000 as well. I think it's a really good time for everybody to support each other, but it's also a really good time to plan for a positive future going ahead. I think interest rates are low. There's so many good things happening. Don't get bogged down in your own little bubble and think that the world's ending or that it's depressing. Get out in the sunshine, go for a walk, take some fresh air, and realize that this thing's going to end and that the market's going to boom off again. And I really do think that that's going to happen. What are your final thoughts, Dave?
Oh, look, absolutely, mate. I think key for me now to folks tuning into this is stay connected and stay informed.
Yeah,
You know, stay connected to your network, stay connected to other people who share your passion and interest in property, and stay informed, because this is going to shift around a little bit over the course of the remainder of the year. Hopefully, Steve, we do a bit more of this and keep people really up to date, and probably tack on to that. Don't listen to everything the media says, because I think that, yeah, well, they're going to pull the headlines out of this. So, you know, there'll be a lot of clickbait activity in the property market, which will be telling stories that may not be quite true. And I think if you're serious about your property plans, then that will be your last source of inspiration. I think, again, you know, stay connected, stay informed, but don't necessarily get your news from the wrong place.
No, fully agree. Awesome. Hey, look, thanks so much for your time, Dave. I really
Pleasure, mate.
And if anybody wants to see some more of these videos or think this has been of great value, hit the like button, throw down a comment there. It's really, really helpful for us to make this go a little bit more viral and spread this information out there. Dave and I, sitting in our respective kitchens, are doing this purely for your benefit, to try and assist property investors in the marketplace at the moment. I'd love to do some more of these and get some more people on board. And Dave's always got valuable info, so really love to do some more of these. So comment.
Awesome.
Dave and I will be on Facebook on our own pages for the next half an hour or so, answering questions. And if you're watching the recording, we'll be doing the same again over the next few days and weeks. Thanks very much for joining us, and thanks again to my co-host, Dave Windler.
Pleasure, mate.
Thanks, everybody. Goodbye.